Now, on to, Suzlon. That's the company on our radar. Now, the company has successfully completed the QIP issuance. It's raised 2,000 crore rupees via a QIP offering. To discuss this and more on the fundraise, we have Himanshu Mody, CFO at the company, joining in. Mr. Mody, good to have you with us here. Good morning. I remember we spoke last on the 31st of May this year, 2 months back. Suzlon stock was just over 10 rupees. 20 rupees plus now. So it's basically double from the last time that we spoke. And now you have done this QIP offering. Could you talk to us a little bit about the usage of what the funds will be for? We understand a portion will be used to retire debt. What is the current debt? What is the extent of reduction, repayment that you will do? And just some guidance as well. What will be the rate at which, the annual reduction in interest costs?
So, firstly, thank you for having me again. As you rightly said, we've completed the QIP of 2,000 crores. We launched the issue with a 1,500 plus 500 upsize option. Looking at the encouraging investor interest and the kind of names that we got, we decided to go for the entire 2,000 crores. Now, of the 2,000 crores, about 1,500 crores would go towards debt repayment, and the balance would be for working capital and Capex purposes. This would mean that the Suzlon balance sheet would be completely debt-free, in fact, net debt-free, and after a sort of hiatus of 15 years. So we would, in fact, be cash surplus without any debt on the balance sheet.
Oh, that's great to hear. So 1,500 crores will be used for debt repayment, and then the company will be net debt-free, having a cash surplus. So that's on the balance sheet. Wanted to understand a little bit about the order pipeline as well. What's the latest there? There was a large potential 10 gigawatt order from the wind energy segment that was expected in FY24. What can you realistically achieve in this year itself, and what could the growth look like over the next couple of years?
So, our confirmed order currently is about 1.6 gigawatts, which we have under our kitty. The 10 gigawatt that you, of course, saying, from a regulatory perspective, there's a bidding calendar that's been issued by the authorities, which aims at doing about 50 gigawatts of renewable energy through the year, of which 10 gigawatts in a year is dedicated wind, plus the other 40 gigawatts would be solar and a portion of wind as well. Now, as per the bidding calendar, the first 2.5 gigawatts of bids or RFPs have been issued, and I think the bids will be underway soon. So as and when the regulatory regime, conducts the bidding cycle, of course, as OEMs, one of the leading OEMs, would be talking to the prospective utility companies that secure those bids.
All right. Hi, Mr. Mody. Good morning. It's good to hear that you're going to be debt-free. And obviously, the total addressable market for you as well is fairly large. We'll talk about that a little bit more detail in a while. But for this year, what kind of a revenue number you're looking at and what kind of margins? And I ask you this because your enterprise value now, your market cap is 25,000 crores odd. So the EBITDA number will be in focus to get a rough multiple on EV upon EBITDA. What kind of revenue growth in comparison to last year? What is the margin band we're looking at?
So I don't want to be giving any forecasts on this platform. Of course, last year we did about 840 crores of consolidated EBITDA in FY23. And, our Q1 results have also been on track. So we will be on track for, performance towards delivering the 1.6 gigawatts order book, as I said, which we have under our belt. A part of that is for FY24. And also some part of that is for FY25 already, which we've secured. So I don't want to give any P&L guidance on this, but we are on track towards delivering on our business plan.
But there will be a revenue growth for this year. First quarter has been flattish. There will be a revenue growth. And since some input costs have cooled off as well from these mid-teens, that's 15% odd, can the margin band move a little bit higher?
So, again, that will be our endeavor. But, again, I don't want to give guidance on increasing the margin band, by improving working capital efficiency of the company, which is one of our key targets. Certainly as a byproduct, we would be looking at how we can optimize margins. And typically, if you see H1 of the financial year is, about 30 to 40% of the overall financial year because of the seasonality. So the businesses are more skewed towards H2 in terms of revenue recognition and deliveries of the machines.
Mr. Mody, not to tie you down to any particular number, but last time, when last we spoke, you said, you could, FY24 revenues could be about 8,000 crores.
Well, that was, if I remember, there was a conjecture that you guys led me to. So, I think we would be on track, as I said, to deliver our order book, which is available with us. And last year, I think consolidated revenue, we did close to about 6,000 crores.
Yes.
And we did 664 megawatts in deliveries in FY23. Now, depending on how much of the 1.6 gigawatt we're able to deliver in FY24 would determine how much over the 6,000 crores in revenue we're able to do.
Just to sort of got that, you said you're debt-free after a long time, right? I mean, Suzlon of yesteryears, we remember that. But then at that point, there was also the problem of debt. Now you're debt-free after a long time. What kind of, and you said there's a calendar which has been issued, 10 gigawatt of wind power auction every year, right? So, so the market is there, opportunity is there. Does the company have the capability, or are you building capability, or it's all there to kind of, optimally use it to build out things in a very sustainable kind of way over the next 4-5 years? If you can give us some sense.
No, so sure. From a company perspective, the capability to deliver a substantial market share of whatever India does in terms of wind additions has always been there. I'd sort of like to pick up an example of 2017, which was the last peak that we saw in terms of wind implementation. Was close to about 5.5 gigawatts is what the country did in 2017 financial year. And in that very year, as a company, we did about 1.8 gigawatts. So it was 1/3 of the market share in 2017, which was 6 years ago. So there is no reason for me to believe that if we could do that 6 years back, why wouldn't we be able to do it today with a much more stronger and leaner balance sheet?
I just have one more question on this O&M AMC, the operation and maintenance vertical, right? So in that segment, what kind of growth are you looking at, and any guidance? I mean, I know you don't want to give us any guidance, but just a trajectory on what this segment could do for you?
So this segment, in fact, the business cycle is that once we deliver the machines, there's a 3-year warranty that we built into the pricing. So in FY24, FY25, there would be inflationary linked secular growth on the O&M business, because the supplies that were done 3 years ago, due to the financial constraints of the company and also COVID, the supplies were limited. So the real uptick in the business for O&M would be visible from FY26 onwards, which would be a discontinued growth. But 24-25 financial year on the O&M side would be more sort of secular inflationary linked growth.
All right. Himanshu, just coming back to you, we got a new listing right here on the screens. SBFC, which is Small Business Finance, that has made a debut in the marketplace. Is run by very well-regarded promoters. I mean, people who launched the business, and it's not an old business. I mean, just launched, I think, in 2017 or so by veteran HDFC bankers. So, the market has taken a bet on the promoters, and of course, I mean, what they're trying to do out there. So it's a 50% premium to the issue price, basically, right at the word go. The stocks come to the market at about 85, 86. There was some hand-wringing about the fact that even in the issue price, the valuations were a little steep. But, well, things have gotten a little steeper with the listing. So, yeah, I mean, the market pretty receptive of what is perceived to be good quality promoters and good quality businesses.
Absolutely. Well. And, even if you look at their core financials, right, the AUM growth has been really strong. I mean, in the past couple of years, it's a 50% AUM growth that the SBFC Finance has seen. And as you said, their management is not only experienced, but they have a very strong retail lending background as well. So, that, of course, will help at a time like this. So, SBFC Finance having a very strong listing there. But, Himanshu, before we let you go, just one final question from my end. We were talking about how the company is going to be debt-free now with the proceeds of the QIP. But any fresh Capex that you'd want to put on board, would you have to tap the market anytime soon for expanding your capacity?
No, so we have enough capacities installed to be able to deliver the market requirements. And yes, there is certain capex that we need to be incurring in FY24. And part of the QIP proceeds, the balance 500, as I said, would be towards working capital and the capex requirements that we have for this financial year. So we are well geared up from market opportunity to completely meet the demand and take a fair share of what we deserve.
Okay, Himanshu, thanks so much for stopping by. Well, the big headline, I think, is that you're debt-free, which is good news for your shareholders. I think next time around, we'll try to quiz you a little bit more on the operational guidance for this year, because now, as I said, the market cap is already 25,000 crores odd. All eyes will be on the EBITDA. For the time being, slip into a short break.